Hello, it is the 8th of March 2011. This is the second silver report for the day. I finished off the last one by talking about inflation within the fiat currency, where it's in a parabolic uptrend. It has been for quite some time. Now, I don't know why people do nothing or very little about the situation. But there's some that does. However, like I say, there's no stopping this current inflation unless somebody does something about it. We'll start off and we'll work within the hourly chart, and that's the main chart we'll be talking today. Also focusing within the 5-day moving average, but not on this particular chart. This goes back to the later part of February. Right now, the silver market approaching 3 o'clock is trading amongst this Fibonacci variable. This represents this high and this low. Therefore, we were facing the resistance in here, which comes from this high and this low. I've removed that line because for now it's important to see how it reacts within this very boring consolidation. Right now, it is still above this level, which is very important. A level that needs to hold for the market to get up and running because we found resistance, or excuse me, we found support where we found resistance before, and because it has now made this lower high from in here, that it's really crucial that it really stays above this level. If it does come back down here to find a higher low, then it can very easily change the direction within the lower high situation and then maybe finally have this test within this 50-day moving average because this range has been for quite some time. Now, if we shorten this up and throw in the 5-day moving average as well as a new little indicator on the top of the screen, and I've talked about this before, but it's been over a half a year now. I was looking at a video yesterday that I did back in October talking about the rate of ascent slash descent of the 5-day moving average, which is what this is. Therefore, we can find the 0%. That would be the zero line. Everything that is above the 5-day moving average means that it is a rising 5. Obviously, it's below what the 5-day moving average is declining right now. However, it is stabilizing fairly average at best. The significant thing, this is the moving average or the 5-day moving average within this entire chart. Now, how this is calculated, it's very easy. You can do this with any moving average. You take the level of wherever your moving average is on the current time frame, and you subtract its level from the previous one. You take that difference and you divide it by the previous one again, and that gives you a percentage increase or decrease within the situation. We'll look more at that on the next particular chart, but we'll look at the price action as it went through this 5-day moving average, which was rising at the time. And it first found resistance back in this level here, found some nice support at this Fibonacci level, came back to this level as well as going above the 5-day moving average. It was still declining. This was a key area for it to hold and go higher. It held it very poorly, and it really didn't go higher, making this lower high, stabilizing within the 5 in here. Now it's went down below it, and it's looking as if it may use that area now as resistance in association within the 1-day moving average as well. That doesn't mean that it will. It's getting really choppy above and below this moving average, where this could be considered a little bit of a fake out. Now this could be considered as a fake out, thus the market going very neutral for the intermediate term time frame. Now, as far as this chart is concerned, if we expand this out going back to March, we can see, well, first off, we'll put in a 0% line, make it blue, and make it a straight line. I do that all the time. So we have a 0% line. Whenever we are above this line, it's a rising 5-day moving average. So before we had this fall, it was remaining above the rising 5-day moving average in a huge plunge that brought us down towards here. And now it's stabilizing very well. However, if it does end up making this higher low within here and then breaks the zero line and starts to go higher, that would be super strong, showing how weak or how temporary might be a better word that the sudden crash was within the start of May. That's all I'm going to say about this for now. What I'll try to do is at the sometime later on the blog, this chart going back to last year, and put that on the blog later on. Now, as far as the volatility is concerned, the average moves in the past were like 0.7% per hour on average. Blue line represents the average hourly movements over the last 2 days, orange over the last 10, and maybe it's going to still develop this head and shoulders pattern. If that's the case, it's going to have to start moving towards the upside. Generally speaking, though, when this thing is low, then the market should either go sideways or towards the upside. Okay, thank you for watching this video, and have yourself a great day. Bye-bye.